It's time to go around the world of business. Even though it's Easter, we still do business here on Business Incorporated. Welcome to 55 Minutes Around the World of Business. Here's what's coming your way on this episode of the program. Kenya inflation dips to a 2-year low. Congratulations to them. But it's not a good one for South Africa because from April the 3rd, there'll be increase in the fuel prices. And we come to Nigeria. There are going to be more primary health care centers, and the authority promises transparency. Good afternoon, I'm Ini John McCoy. Happy Easter to you, but let's do business in spite of the holiday. Starting from the global space, oil prices rose on Monday, adding to recent gains and expectations of tighter supply from OPEC Plus cuts, attacks on Russian refineries, and as upbeat Chinese manufacturing data supported outlooks for improving demands. Brent crude rose 29 cents, that's about 0.3%, to $87.29 a barrel after rising 2.4% last week. U.S. West Texas Intermediate crude futures was at $83.48 a barrel after it gained 31 cents. That's about 0.4%, following a 3.2% gain last week. Trade volumes are expected to be thin today as several countries are closed for the Easter holiday. Both benchmarks finished higher for a third consecutive month in March, with Brent holding above $85 a barrel since the middle of last month, as the Organization of Petroleum Exporting Countries and their allies, that's OPEC Plus, pledged to extend production cuts to the end of June, which could tighten crude supply during summer in the Northern Hemisphere. And still in the global space, Chicago Board of Trade soybeans inched higher on Monday, while corn and wheat futures declined amid reports of multi-year high stocks for all three grains. The most active soybean contracts on the Chicago Board of Trade, as the CBOT, had risen 0.25% to $11.94 for half a bushel, while CBOT wheat was down 0.31% at $5.58 for half a bushel, and corn fell 0.68% to $4.39 a bushel. U.S. farmers are planning to cut corn plantings by more than expected this year, 2024, while expanding soybean seedlings, and that's according to the United States Department of Agriculture, as low crop prices and high input costs have many growers looking to cut expensive. The USDA, in a separate quarterly grain stocks report, said that stocks of U.S. corn as of March swelled to 8.343 billion bushels, the most in 5 years. Soybean stocks rose to a 2-year high of 1.845 billion bushels, while wheat stocks rose to 1,087 billion bushels, a 3-year high. Egypt has a target of procuring 3.5 million tons of local wheat during the 2024 procurement season. Another type of commodity now, gold. The prices extend their record run on Monday as the latest data showing a slowing U.S. inflation trend boosted expectations that the Federal Reserve could deliver its first interest rate cut in June, while lower interest rates reduce opportunity cost of holding bullion. Spot gold was up 1% at $2,254.71 per ounce after hitting an all-time high of $2,262.19 earlier in the session. U.S. gold futures climbed 1.7% to $2,275.60. Data on Friday showed U.S. prices moderated in February, keeping a June interest rate cut from the Fed on the table. Fed Chair Jerome Powell said February's inflation data was more along the lines of what they want to see. Bullion prices have also hit record highs in other currencies, including the euro, the yuan, Indian rupees, and the British pound sterling. It's still Easter. In the morning, we talked about how families have had to squeeze themselves and reduce the excitement and the spending because of the current macroeconomic hardship in the country. But it's not all about that. Also in Easter, it's still festivities and celebration at fun spots. There's a report captured by our correspondent from Lagos.
It's fun time for these children who are privileged to attend the Lagos State 2024 Family Easter Fiesta at the Lagos House Alausa Ikeja. All kinds of games and other fun activities are available for them to have the most memorable Easter celebration. It is an annual event organized by the Office of the First Lady, Dr. Ibijoke Sanwo-Olu, who is also here alongside the wife of the Deputy Governor, Mrs. Oluremi Hamzat, to celebrate with the children. While they have fun, parents in attendance listen to a message on the power of resurrection.
Resurrection, when we talk about resurrection, we're talking about when Jesus Christ was arrested. Jesus Christ is the Son of God. He came to this world. We celebrated his birthday.
Now it's time to celebrate the pupils and also give them a sense of belonging.
The cognitive, affective, and also the psychomotor aspects, and which has to do with the total learning process of our children. We read, we know, we recognize certain things, and then we also practicalize them. That's the whole essence of learning.
The essence of the program is just to encourage the students, to bring them close, to let them have a feel that they are well recognized and they are expected to behave well, to know that the future of this country belongs to them. They should have sense, to give them sense of belonging. It's not about the other people alone. Governance is inclusive.
Mrs. Hamzat reads the First Lady's speech, highlighting the need for children to imbibe the spirit of tolerance and peaceful coexistence.
This is the advice for our mommy. Beyond the celebration, I encourage you not to lose track of significance of the Easter season. I urge you all to imbibe the track of the spirit of tolerance, peace coexistent, and sacrifice for one another. You have to love one another, be a good help to each another. You have to make sure that you stay away from sin. Always help mommy, help daddy. You always have to be humble.
No dull moment at all for the children as they are engaged in several competitions and gift items are presented to the lucky winners. The Family Easter Fiesta was introduced by Mrs. Sanwo-Olu in 2021 as a landmark event in line with the essence of the season and has been sustained over the years.
Happy Easter once again to the children, of course, to the adults and all of our viewers out there. Now, let's delve to some other issues, which is the promise that the government, the federal government of Nigeria, through the National Primary Healthcare Development Agency, will be increasing the number of primary healthcare centers in the country from 8,800 to about 17,600. But that will be in 3 years. I'm sure we've seen that news that 25 billion naira would be involved. And so you wonder, why is business discussing this? This is because The agency says it has engaged both the ICPC, the EFCC, and even employed some social accountability officers to ensure that these projects sees the light of the day and is functional. But let's find out how they are going to do this with the Chief Executive Officer of National Primary Healthcare Development Agency, Dr. Muyi Aino. He joins us from our Abuja studio. Dr. Aino, good afternoon, happy Easter.
Good afternoon, Ini, and happy Easter to you. I'm
Great.
glad to be here.
So I have to tell you, even when we're having, I just was discussing this with my colleagues before I came on air, and they were like, well, it's not the first time we're hearing government make such pronouncement. And I tried to tell them that from my conversation with you off air, this should be different because you have the ICPC involved, you have the EFCC involved, and you even have special accountability officers. But convince us, Dr. Aino, that this will be different, that in 3 years we're going to have 17,600 primary healthcare centers around the country.
Thank you very much, Ini. I think I will provide a little bit of context and then get specifically to your question. So when I became the Chief Executive of the National Primary Healthcare Development Agency 5 months ago, plus a little bit, the Coordinating Minister for Health and Social Welfare, Professor Ali Pate, and the Minister of State for Health and Social Welfare, Dr. Tunji Alausa, had already articulated a health sector-wide strategy, which is the blueprint that is guiding the way we're thinking about the transformations that we're implementing to help achieve the renewed health agenda of President Bola Ahmed Tinubu. So we identified a number of issues at the time. Very quickly, really drawing from that and realizing again that the president had launched the National Nigeria Health Renewal Investment Initiative in December 2023, which had specific outcome indicators, which the president is really looking to deliver to Nigerians. Things around reduced mortality of mothers, of children, of babies, things around improved quality of healthcare. So better quality of our health facilities, better trained, better distributed, more competent health workers, increased coverage of important interventions like immunization, like antenatal care, and of course, better engagement with citizens so that we have a responsive health system. So we very quickly looked at all of that and developed our own strategic blueprint that is anchored around a number of things. One of it is, of course, the overall goal is to make sure that every Nigerian, wherever you are in the corner of this country, whoever you are, rich or poor, you can walk into a primary health center and receive the basic healthcare services that you need. So we're doing this through a 3-pillar strategy, but I will only focus on some priorities in the interest of time. So one of the things we want to do is to improve the functionality and number of the primary health centers, like you have said. So what we found was that even though there has been significant investments, like you said, prior to this in the primary health centers, many of them are functional, but there are many of them that do not meet the bar of what we would call fully functional, meaning people can walk in and safely and in a dignified way receive the services that they need. So the Basic Healthcare Provision Fund, which was established by the National Health Act of 2015, is the framework by which we are implementing these transformations using a sector-wide approach. Now, there are 8,306 facilities across Nigeria, primary health centers, that are currently receiving what we call direct facility financing, which is money to operate the facilities. Everything from the power, turning the lights on, turning the water on, getting some of the commodities that they need, but even where they need ad hoc workers. The challenge over the years is that there has been a number of gaps in the implementation of this. So there are some fiduciary issues, so things around transparency and accountability, especially as you move downwards to the health facility. There have been operational issues, so not as linked to the performance indicators as you would like, but also there are operational issues around what are the flexibilities that the facilities have to spend the money to hire the kind of workers that they need. So what the MOC then did, the Ministerial Oversight Committee met in December, where a decision was made to hold off on the disbursement of resources to the states through the major gateways, the National Primary Healthcare Development Agency being one of them, but also we have the National Health Insurance Authority, we have the National Centers for Disease Control, and we have the National Emergency Transport System. So those are the four gateways. Now, the MOC made a decision to halt the disbursements for us to identify, and actually the Honorable Coordinating Minister inaugurated a subcommittee co-chaired by myself and the DG of NHIA to identify ways to improve the spend of the money, so that ultimately it's towards a reformed basic healthcare provision program called Basic Healthcare Provision Program 2.0 that will be launched in July. But even before then, to say what are the immediate changes that we need to make sure that when funds are released to the states, that they will not be misused. So we have gone through that, worked with the states, worked with the development partners who are part of the Ministerial Oversight Committee, and identified a number of things. We will be using technology to really improve the transparency, so the visibility of what money has been transferred where from the ministry through the gateways, NPHD, NHIA, to the states, both the state primary healthcare development agencies, but also the state health insurance agencies, and to each health facility. We would also be able to track the expenditure at that level, at the level of the facilities, so that we can see where the money is going and ensure that the facilities are spending them on the things that they should spend them on. So in addition to that, we are then recruiting what we are calling social and accountability officers, who will be monitoring the performance and the financial management at that level. They will check what the facilities are doing. They are independent and will be managed by independent third-party agents that are not government entities. So they have an independent eye on what is happening, and they will report to us. In addition to that, we are bringing in the law enforcement institutions, the ICPC, the EFCC, both to guide us as we think about these reforms, but also when there are areas of suspected misuse of funds, they will join us in the investigation and taking action as is necessary. The plan over the next couple of months is to really revise the guidelines that are informing the way the money is used for the Basic Healthcare Provision Fund, and ultimately lock in some of these changes before July, and then we launch BHEPF 2.0. But some of these changes that I've highlighted are happening now. In addition, at the Ministerial Oversight Committee that happened last week, Thursday, the minister chairing the MOC approved, as you have mentioned, the sum of 25.8 billion naira to go through the gateways to the states and onward to the facilities. And to do that and make sure that even before we roll out 2.0, we get maximum value from that, we are going to be using a number of interventions. One is that each state has developed a remediation plan coming out of the state-specific gaps that were found in the way they spend the money. So we're conditioning the release on the implementation of their plans, so that all of the gaps that are found, have a dedicated account, only spend the money on specific items and things like that. So our states are implementing that. That's when they will get the money. Secondly, we're making sure that the facilities that receive the money are those that are actually providing services. So to achieve that, we have right now commenced a nationwide assessment of the facilities. 23 states and the FCT have been completed as of last week, and the other 13 states will be done right after the holiday, just to confirm that the facilities are actually the ones that should be receiving the money, and then make sure that we have all of these additional resources that I've talked about to manage the money. In addition, the minister launched a whistleblowing line where people can call to let us know when the resources are being misused. It's a phone line and an email address. So every Nigerian, we call on Nigerians in every corner of the country, we call on civil society organizations, to pay attention to our facilities. Health workers, when you see anybody trying to misuse the Basic Healthcare Provision Funds, the number is 0701 302 1570. Again, it is 0701 302 1570.
All right,
There's
Dr.
also an email address for those who have access to email services. Yes.
So I want to come
alert@health.gov.ng. Thank you.
Quite a lot of information you've given us there, and well, maybe capture some of my questions, but I hope this phone number is working, because a lot of times when we get phone numbers from government agencies, a lot of times they are not functional, there's nobody to pick it up, and when you have just one line for the whole of Nigeria to call on to, I'm sure you can imagine, what would happen to it. So it would be nice to know that that number is functional, number one, and that there are alternatives that people can really get through to people to answer those calls.
I think, Ine, that's a very valid concern that you have raised. But I should reassure you that one of the tenets of the strategies, both the health sector-wide strategy articulated by the ministers, but also the PHC strategy that is guiding what we are doing, one of the key tenets is really building trust and engaging with citizens to be responsive. So this is not done just randomly. This is done very intentionally. This is the first line that was launched by the minister. The goal is that we will be deploying several other mechanisms. We're going to be having listening sessions. We're going to be, again, like I said earlier, working with CSOs in the communities. We're going to expand the number of lines, both at the Ministry of Health level, but also at the primary health center level, where people can reach. Nigerians will see that. We're going to be sharing information publicly in the newspapers, but also on the websites. When funds are distributed, you will know how much is going where. When we are achieving some of these results that we're committing to, you will see it. We will communicate with you. When we are not doing as well, or we are missing some detail in the field, we will also be looking to hear back from you, because we want to be accountable. We want to hear from you. But I do assure you specifically that this number is working, and you can call it. Again, like you said, we have started with one line, so everybody may not get an immediate response, but I can assure you, you will find somebody at the end who may be talking to somebody else depending on the volume of calls, but we're working very quickly to expand the number of lines.
All right, so please give us a timeline to this 25.8 billion naira and this plan. Have the social accountability officers been employed? Just give us timeline what to expect, so that when we don't see it at that time, then we know to call that number and say, Doctor, I know this is against what you promised us.
So, thank you very much, Ine. The Ministerial Oversight Committee approved the disbursement of the funds last Thursday. Now, so in the next week or so, the funds should move from the ministry to the gateways. The gateways are now working on a state-by-state basis to say, have you put measures in place that make sure that we don't repeat some of the errors of the past, that make sure that some of the gaps have been plugged. So over the next 2 weeks to a month, we are anticipating that most of the states will get the funds as appropriate and be able to pass it on to the facilities that have been revalidated and qualified. Now, between now and June is when we are then putting in all of the medium to longer term interventions that will be incorporated into BHCPF 2.0. So we have commenced the recruitment for the social accountability officers, or what we also call performance and financial management officers. We are engaging with CSOs already. We are making the technology, we're developing the technology solutions that will be rolled out to create the transparency that I'm talking about, amongst other design interventions that we're making on the way we are operating the basic healthcare program, both on our side but also on the demand side, which is the NHIA side. So I can guarantee Nigerians that by July, when we roll out, all of these things will be in place. And in fact, Nigerians will already start to see the work that we're doing to really transform the quality of the primary health centers across the country.
Thank you so much for that very clear timeline. Dr. Muyi Aino, the Chief Executive Officer of National Primary Healthcare Development Agency, and we certainly look forward to having more primary healthcare centers in the country.
Thank you.
All right, now let's go to the markets. I don't know what Will will be giving us today. I know the markets are closed, but who knows? Will has our way.
Not all markets are closed.
Oh yes, not all markets.
Yes,
I know the oil market is open.
Yes.
The global oil, the global metals, and then the grains.
And you
market.
see U.S. markets are still open. It's not everybody that likes to, jump in for another holiday right after Easter Sunday.
My bad.
Yes. So we're just going to be seeing, though we saw some very good numbers coming in from the U.S. They closed strong for the first quarter.
After the inflation.
Yes, first quarter. And they're starting off on a good note for the second quarter. Nigeria, depreciated, for the week. But let's just see how, it was a holiday shortened week. Let's just see how they bounce back.
Exactly.
And, recover those losses that they made and see how second quarter is going to be doing for them. Tomorrow, those numbers are going to be coming in and we'll see how they perform.
Yeah.
And so we kick off with major equities in Africa, where, as I mentioned, most of them are still closed for the Easter holiday. Meanwhile, in Egypt, the EGX30 is up at intraday by 3.86%. That market is open, still at intraday. Kenya closed Thursday's session in the red. Now, we're going to be diving into a very controversial conversation. It's been in the talks in Nigeria. It's making a round. Last Thursday, the CBN released the new minimum capital base for commercial banks under the new arrangement. We're seeing 500 billion naira was pegged as minimum capital base for banks with international licenses, 200 billion naira for banks with national authorization, and 50 billion for banks with regional licenses, and we see for merchant banks 50 billion and the rest of them. Now, before now, the last capital augmentation exercise for banks was in 2004, 2005. That's about 2 decades ago, when Professor Soludo, that's the former CBN governor, was in charge, and we saw 89 banks reduced to 25. But we're going to be talking to Mukhtar Mohammed. He's the CEO Finance with Mukhtar, is joining us and providing more insights into this topic, this subject matter that is, making waves in the financial sector right now. So, Mukhtar, it's good to have you on the program.
Thank you for having me. Happy Easter.
Happy Easter to you too. We see that the CBN governor, Yemi Cardoso, is walking the talk since he reiterated President Tinubu's call to upgrade the country's economy to $1 trillion. And that was last November. We know that the drive cannot be done without the banking sector because they're going to be making the big ticket transactions. But was this the expectation, the numbers that came in and what the CBN, circular the CBN published, was it the expectations of market watchers?
No, it wasn't the expectation of market watchers. Market watchers were not even afraid. They were looking at the CBN coming in the $1 trillion mark. $1 trillion naira capital base. That's what they were waiting for. The banks were thinking the banks were highly capitalized. Most of the banks, in terms of when you look at a lot of things goes in there, you look at their shareholders from, you look at retained earnings, you look at profit after tax. So there was a lot of things going on for them, going with the Nigerian bank that people were not even worried about it. And you saw that response from the equity market. There was no any fear about what was going to happen because they knew that the banks are highly capitalized. And the CBN also alluded to that by saying Nigerian banks are still very strong. So it was not a shock per se to the bank, even if some banks were already looking at beefing up their capital base. They've already informed the market. Access Corporation, the owner of Access Bank, have done that. GTCO, we had an information from that they will be doing that very soon, even before the CBN came up with it. So not really a shocker to the banking sector, but maybe the financial sector or market watchers. Maybe the way they are about to go about it, that's where there will be a lot of challenges.
But, there's a catch to this, though. And this is where we see that debate among bankers right now. The CBN has asked the banks to exclude shareholders' funds, which includes retained earnings and also additional Tier 1 capital from the share capital calculation. And this decision is being criticized by bankers. I just want to know your opinion. Is this a standard that's practiced globally? Or is this unique to the Central Bank of Nigeria and its requirements for the domestic banks?
Yeah, maybe it will. We've always been saying we should have our own homegrown economic policy. So maybe we are beginning to think homegrown economy policy, because this current policy is only peculiar to Nigeria alone. It's not the global best practice. Global best practice is retained earnings, shareholders fund. In 2009, when we had the revoking of some licenses from Nigerian banks, the then CBN governor told us that they have a negative shareholders fund. Bank goes into crisis when they have a negative shareholders fund. The global best practices is you use your shareholders fund, retain earning to build your capital base, and sometimes they go as far as even issuing bonus shares to the investors also to build their capital base, especially from their retained earning. So global best practice, that's what is happening. That's what is supposed to happen. But Nigeria as it is, and the CBN have called it say increase your share, your cash, your cash. I'm trying to look for the name that they said. So I think just about injection of cash into the bank. So whatever name the CBN goes, it's called a share capital. So just increase your share capital, and you don't have to use what you have already. You have to sort for those funds and bring it in. You must not come with bond. You must not come with this. So all those things are looking at financial space. Those are what financial analysts or financial students we call the normal economics of finances have been thrown thrown away. And so what we have now is the CBN telling us that this is what we want to do and this is how we are going to go about it. So all the same, for me, it's a good policy for the bank to beef up their capital base. But again, the way they are going about is taking off shareholders from it. I wonder those funds, when they come in, what are we going to call them? We just call them share capital. Who brought this capital in? Those capital is going to be added to the shareholders that, okay, those people that injected those capital are now shareholders of those companies. Those are part of the things we'll be waiting for the CBN to let us know.
There's some are saying that we will see banks probably giving higher dividends or bonuses because they have to put the money somewhere. But let's just talk about, why do you think the CBN is taking this stance? Can you tell us?
Well, for me, I think it's good. When you look at, we did this thing sometime in 2000 and I think 2003, 2004. And at that time, the exchange rate was just about $130. And today, the exchange rate has gone as high as 1,300. So when you look at that by what the capital base are today, you could say those capitals have been eroded. But again, the CBN governor has said that they want to build $1 trillion economy. And so they were trying to make sure that the Nigerian banks play a high role in building of this, have a role to play in building this $1 trillion economy, especially for high ticketing jobs and jobs or businesses like what you just said. Which for me, I don't have a problem with it. I just have a way they're saying they have to go about it. Because I give an analogy. It's just like Mukhtar Mohammed now. My daddy gives me an inheritance and he's dead, and I want to calculate my will. And then I say, yes, this money is now my own. So I now put my name there and I said, have this amount of X amount of money in the bank. And you say, no, Mukhtar is not your own. It's your father that gave it to you. And your father. I said, but he has given it to me. It's mine. You say, no, I cannot use it. I think that's what the bank is doing. So you cannot put it about your net asset or your net value because somebody gave it to you. Also, normally that's my only concern. They can tell them to raise their share capital. I think it's very understandable, especially when they are becoming global players. But Nigerian banks have been awash with a lot of liquidity. So by telling them to sort for more liquidity, we are not looking at our inflationary pressures any longer, because that will also create more liquidity in the system. CBN is holding about 45% of the banks in terms of cash reserve ratio, but yet we are still seeing a lot of liquidity. About 92 trillion is still out there, and they are still struggling to see how they can mop it in. And now you are seeing banks will show up their capital base. I heard him talking about the Kenya economic now inflation all-time low, 2 years all-time low. We need to learn from them, because what they did is not rocket science. Reduce tariff on major goods that household item use, balance your exchange rate, and look at how their inflation has drastically come down. So sometimes we say we don't need to do copy and paste, and I'm sure maybe the CBN has been listening. They say, no, we don't want copy and paste. We're looking at the precarity of our own bank. That's why we're doing what we are doing. unless they are trying to tell us that the banks are not being truthful with their retained earning. In fact, I give an instance, Access Bank have an earning per share of 17 naira 40 kobo, and they are just paying their shareholder 1 naira 80 kobo. So you want to say that the remaining earnings will just be kept there for what? Just to be paying shareholders fund or expansion projects. So I still waiting for clarity from the Central Bank of Nigeria.
Yeah, so we just know that they've been given 2 years to, raise this money to meet up with these requirements. But how do we expect these banks? Some are thinking, how are banks expected to raise this new capital of about, say, 3 trillion to 4 trillion, especially in this high interest rate environment that is looking like it's crowding out the private sector?
Well, I can tell you for sure that it won't be a problem for Nigerian banks raising this money. I can tell you that they had their plans and they are going to raise the money. It's not going to be a problem with them raising this capital base. They are one of the strongest in Africa, and they are becoming global player, and they are going to attract these funds into the economy. I have no doubt about it. Some of these banks are highly liquid, especially the tier 1 banks. We may have challenges with tier 2 banks or regional banks, but they might just think to transform into national bank because, again, they will have those funds there. We attract a lot of investors. The good news is hopefully maybe the banks will be looking for foreign investors to show up their capital base by bringing in FX into the economy. Because when you look at 500 billion and you look at Nigerian exchange rate as it's just barely, maybe barely $600 million, I don't think that should be a challenge to the Nigerian bank. My own challenge is that banks or the stock market has been a place for wealth creation and wealth distribution. So what we'll see now, we might have a lot of major players just taking up those banks, buying up those shares because they have the liquidity, especially foreign investors, and then Nigerian investors might not enjoy it any longer because the banks will be highly owned by most of these foreign investors. And my fear, maybe a lot of Nigerian politicians also will be the ones owning some of these banks because they are the ones that will have the resources to begin to buy shares of this bank. Even if the CBN say in 2 years' time, and you saying in 2 years' time, and why are you telling the banks to come up with a plan by the end of April? 2 years is still very far away. If you are telling the banks to come up with a plan in the next 6 months, I will understand. But you are telling them that they should come up with a plan by the end of April, and you said the capitalization branch is going to take 2 years. So there's a lot of clarity. It seems to be like there's a lot of things that the CBN are not telling us that they know. So let's wait for the coming days. Like I said, this news came out sometime on Wednesday, Thursday, and then went on public holiday. So we are still waiting for the CBN to give more clarity on it.
While we keep waiting for the CBN for that clarity, we see that UBA has issued a notice informing the shareholders of a 30-day delay in publishing its 2023 audited financial statement. Why are we seeing this slowdown, Mukhtar?
Well, it's not uncommon. I mean, we don't have to make a mole out of it because it's not uncommon. We've seen that what they do is that the stock exchange give you a luxury of 3 months after your year end to publish your result, and if you are not going to publish it after that, they'll give you a 1 month period. And so what we are saying has always happened, but now maybe because of the recapitalization and the way the CBN have been going about talking, like if some banks really have issues. So I don't think that is going to be it should be a major issue because Access Bank or Access Corporation just released their result before the end of this quarter, and hopefully we'll get this same newsletter also was released by Zenith Bank, also telling investors that they are waiting for CBN to give them the go ahead. And some banks have gone ahead and have released those results, or whether they call it audited result, or waiting for CBN final approval in terms of approving the bank balance sheets and also payment of dividend. You mustn't forget that some of these banks are now holding structured companies, so they have other subsidiaries. Those results are ready, and so it's just the banking aspect of it which they are waiting for the CBN to approve the result for them. So I don't have a problem. I don't think it's anything we should worry ourselves about. Hopefully, by the end, in the next 2 weeks, we will see those results rolling in. But it will be good for those results to come in, especially because of corporate governance. And now that we are seeing we want foreign investors, now that the banks will also be out there looking for funds for recapitalization. These are the type of things. That's why I keep saying that even if the CBN want to drive $1 trillion economy or a $1 billion bank, they also as regulators must be $1 billion regulators. You can't have $1 billion and you have regulators that are not up to the game. So as you are saying the bank should recapitalize, how well are you training your own staff also to meet up with this high demand that will come with high liquidity? We saw it before it happened. Governor Soludo said that no Nigerian bank will go under. But because they were awash with liquidity and the regulators were not up to the game, we saw what happened. Banks were involved in a lot of ticketing deals that they were not supposed to be involved in. And we saw what became of that. It took the intervention of Lamido, and also the creation of AMCOM for us to even have some banks still standing. So as we are pursuing the banks, as you are telling the banks that the banks should recapitalize, you should also be looking at manpower to make sure that you are able to monitor these banks, especially when they will be awash with a lot of liquidity.
Yeah, so CBN has to up their game when it comes to the oversight that they have over the banks. Thank you so much, Mukhtar Mohammed, CEO, Finance with Mukhtar, for sharing your insights on Business Incorporated.
Thank you for having me.
So we'll move over to the Middle East, where most major equities in the Gulf traded at positive at intraday amid rising oil prices. Abu Dhabi was up 0.28%. See Dubai also trading up 0.26%. Now, still within the region, we see Saudi and the Qatari indexes also doing nicely, slightly positive, though, 0.07% and 0.18%. Now, let's flip over to the U.S., where stock futures, they're trading today was up slightly today in early trade as Wall Street prepared for the start of the second quarter. Now, futures tied to the Dow Jones Industrial Average, you see Dow 0.003% up, still at 40,000 points, S&P 0.39%, and NASDAQ futures 0.55% up. Let's look at Asia markets very quickly. We see Nikkei down, close today down 1.4%. Kospi in South Korea 0.04% up. The Hang Tech Index is is closed for the holiday today. Well, let's see China's stocks, China's market is up 1.19%, and the S&P in Australia, that's the ASX 200, is also closed for the Easter Monday holiday. We'll see how they perform tomorrow. So the markets are really doing well for Asia, except for the two of them, except for Nikkei, which is down. Profit taking will definitely have to set in after those highs that they,
and don't forget, they're still
hit.
Rallying.
Yes, they really hit, very big numbers, huge numbers, and then we're expecting more from them. They should have let us down.
Okay, I'll tell them. Thank you so much, Will. Well, let's head over to Europe there, where, well, the Easter is still on, but it has not calmed the nerves of those at war. The war in Israel and Hamas made headlines again over the weekend. And central bankers have been talking in that area, been talking about this and some of the impacts. Let's hear why the central bankers are talking at this time with Lars Holter. Lars Holter is from Deutsche Welle. Hi, Lars. Happy Easter. Good afternoon.
Thanks for having me, Ini. Well, let's start in Rome, where Pope Francis gave his traditional Easter Sunday address, and he called for an immediate ceasefire in Gaza and for the release of all Israeli hostages, right before delivering his Urbi et Orbi blessing to the city and the world. And yes, he mentioned other current areas of war and crisis, including Ukraine, Syria, Armenia, and Azerbaijan, and some others. But Israel's war against Gaza was pretty much his number one concern. And it is also obviously the number one concern for the Israeli central bank. And that gets me to the economic part of this story. The Bank of Israel warns of the economic cost of the war. And it says specifically that the economic damage would be much worse if not more ultra-Orthodox Jewish men join the country's military. Now, with that, the central bank was unexpectedly weighing in on a contentious issue that has caused a rift in Prime Minister Benjamin Netanyahu's wartime government.
All right, so what else did the central bank say? Perhaps they have a solution. I know that appeals from the United States hasn't changed the mind of Mr. Netanyahu, but what can the central banks do it?
Yeah, that's an interesting question indeed. Here's the underlying fact. Israel has mandatory 3-year military service for its citizens, except for the ultra-Orthodox. They're exempt because of their religious background. But of course, the fewer people are in the military, the more they have to do, especially in times of war. And now the Bank of Israel says that the war has added a burden to the economy due to the sharp increase in service days for both conscripts and reserve soldiers. This impairs the soldiers' economic output as well as their spouses' employment. Here's a quote from the central bank this weekend. As the burden of military service is divided among a higher number of soldiers, the economic impact on each of them declines, as does, and this is the most important part, as does the aggregate impact on the economy. So, and I'm still quoting the central bank here, expanding the circle of military personnel to include the ultra-Orthodox population will allow to answer the increasing defense needs while moderating the impact to personnel and to the economy.
All right, Lars, thank you so much for that and enjoy the rest of the Easter. We move to Africa now, where Kenya National Bureau of Statistics has reported a significant decrease in inflation to 5.7% in March 2024. And this represents a 0.6% drop from the 6.3% inflation rate reported in February. Well, KNBS notes that the general price level in March was 5.7% higher than that of March 2023. There was a significant difference in the price of sugar, maize, flour, and other basic food commodities. The ease in sugar prices came after the government lifted a ban on local manufacturing. Local millers produced 63.07 tons of the sweetener in February, the highest number since they resumed operations. It's not so good for a Chinese company as the African Development Bank has debarred Chinese road builder China Hina International Corporation Group, that's Chico, for engaging in fraudulent activity in a project in the lender's funding in Uganda. The ban on Hina-based construction will last 12 months, effective March 28, 2024, a period in which Chico will not be able to participate in any new AFDB-funded projects on the continent, including Kenya, where it has an ongoing project. An AFDB investigation revealed that the Chinese road builder failed to disclose the use of commission agent while submitting a bid in the context of a tender for the procurement of civil works for upgrading of Orunkugiri Ishasha Ikangu to bituminous standard. A component of the road sector support project in Uganda. Chico has road projects in Kenya, in Tanzania, and Uganda funded by the AFDB, World Bank, and local government, some of which have also been marred in various ways. In 2022, Chico abandoned the AFDB-funded Kisi Isebania Road project in southwestern Kenya after its demanded payment of arrears amounting to 1.5 billion shillings. That's about $11.3 million. To South Africa now, where the Mineral Resources and Energy Minister, Gwede Matshe, has announced changes to the South African fuel prices effective from April the 3rd, 2024. Global crude oil prices and fuel import costs play a major role in this adjustment. The recent rand strengthened against the dollar, as the US dollar, has helped to bring down the basic fuel prices. The announcement details various factors affecting fuel prices, including international markets, currency exchange rate, and government levies and tariffs. In line with the working rules to determine the basic fuel prices, the 95-octane unleaded grade is the price marker grade, and the BFP differential between 95 and 93 octanes is adjusted from Wednesday of every first quarter. Still not good in the Gambia. The average retail prices of most of the essential food commodities in the Gambia continues to increase. in the month of March. On March the 11th, 2024, the Ministry of Trade Regional Integration released the average prices of most of the essential commodities that are highly consumed, especially during Ramadan. Well, you see the price of average retail price for edible oil of about 20 liters, which was $11,200 C, is now about $19,000 in the market. Average price of full chicken in a carton, which used to be $1,850, has now gone to $1,900. The average price of a bag of onion, about 18 kg, which was $1,200, on this side is reduced to $800. However, some people are selling a bag of onion at about $1,000 and $1,050. This kind of shows instability in the cost of most of the essential commodities in the Gambia. In South Sudan, there's been a statement unveiling immediate measures to stabilize the exchange market, highlighting the extent to which consumer prices have risen amid falling levels of basic commodities, usually imported from neighboring countries. The governor of the Central Bank of South Sudan, Mr. James Alik Garang, says that they are working with the Ministry of Finance and other relevant institutions in the country and closely monitoring the development in foreign exchange market. According to Mr. Garang, one of the immediate actions taken by the authorities is clearing outstanding auction claims and coordinating with the Ministry of Finance to pay 1 month's salaries for civil servants, army, police, and members of the organized forces, as well as public sector employees. Other interventions include extending monetary policy rates that threaten the purchasing power of the local currency through weekly action of foreign exchange at a revised preferred rate of the bank. All right, let's go to the crypto market. Another market that does not take a holiday is always on there, and see what's happening in that crypto space. If we see the price of Bitcoin, I mean, over the weekend, I kept looking at the price and it came from 66 to 69 to 70 and all of that. Well, we see it today amidst the Easter celebration that Bitcoin has gone down, in this case, to 69. So it's 69,666. Sounds like a dangerous number. Well, $69,666, $1,000.17 is after it dropped 1.28%. A lot of red right here. I wish Laddie was one taking this. So red. Ethereum is also down almost 2%. BNB down. Cardano down. God, I think people have taken out some profit here for the Easter celebration. But let's talk to Gilbert Jokpata. Let him tell us what's going on. Hi, Gilbert. Good afternoon. Happy Easter to you.
Yeah, wishing you the same, Miss Amy. Great to be here.
Great. So this correction, we don't know what's going on. We're expecting having in, I think it's less than 2 weeks now, or about 2 weeks. Is this a correction? Is it a temporary profit taking? Are people taking profit for Easter? What's really going on?
Okay, the market is in silence. It's constantly talking to us. And sometimes I even see it screaming for traders or investors to pay attention. But then many traders and investors don't have the skill to interpret its message. And this is because to interpret its message, you need the skill to interpret price action and then market structure. I know this can be an oversight. Certain times it can be costly, but then that is where market analysts always come in. And personally, I've observed that Bitcoin is perfectly moving in the sideways region. I know some people fail to catch the bigger picture, not realizing that the price fluctuation between 15-20% is normal for large market cap assets like Bitcoin and even Ethereum. As a matter of fact, it is always beneficial. And this is because it allows this asset build a good structure, a good support zone for its next leg up, which personally for me, assessing the market structure, I think that next leg up will move us up to 80K and even 100K in a high speed. But in trading terms, this is called a bullish sideways movement. Most people call it an accumulation region, but this is the phase where profit taking always takes place and then allows new incoming investments. But then in a smaller time frame, before coming here, I realized that Bitcoin was printing a cup and handle pattern. So what it is telling us is that there is a potential downward movement that is to still take place. But before all of this, 60K is a strong support level. We have another support K as part of this sideways, the upcoming bullish trend that will happen. But then I will still want people to remember that Bitcoin is sitting in its lowest it has been in an exchange of about 1.7 million Bitcoin on exchanges. We have the Bitcoin halving on the sideline. Also, the ET and the exchange traded notes, which is the UK's version of ETF, all on the sidelines. All of this is going to bring a more massive demand for the limited supply of Bitcoin.
So how are you preparing for the halving, Gilbert?
Oh, interesting enough, this downward movement is always an opportunity to re-enter into the market. This is more of a discount sale. So personally, what I am doing is making sure I'm building the right investment portfolio. Probably I'm not done with building my investment portfolio, but downturn like this allows me to rebalance my portfolios, weak assets for stronger ones, so that I could take advantage of the bullish market which is before us.
All right, with Gilbert, well, I'm sure nobody can be done building their investment portfolio. Even the richest man in Africa, Mr. Aliko Dangote, is still building his portfolio. Well, thank you so much for your time, and do enjoy the rest of the holiday. All right, so, well, that's it. We still have a few hours left of this holiday. Let me see if I can make some time of it. Even if it's just to rest, maybe go out for lunch out there. You do the same. We'll do business tomorrow. I'm Ini John Mekwa. Bye-bye.